Hello and welcome everybody to this week's Gold and Silver Club Commodities Corner, presented by myself, Phil Carr, and Nik Kalsi at the Gold and Silver Club. So today, this live session will cover a review of the commodities markets this week. We'll be looking at the top trades of the week on gold, silver, oil. We'll also be looking at some live technical analysis. So the markets are certainly moving today. We'll be identifying highly profitable trade setups where possible, and of course looking at the week ahead. So key events looking forward and covering any questions you might have today too. The main news that we've had this week, the main news of the week, is that gold price has fallen to 4.5-month lows as the Fed tapering is likely in the coming months. So gold prices fell to a 4.5-month low on Wednesday, actually after the FOMC minutes the announcement was given on Thursday evening at 7 o'clock GMT, as the US Federal Reserve FOMC minutes highlighted several members of the committee said at their October meeting that they could see the Fed tapering its $85 billion a month bond buying program at one of its next few meetings. So the FOMC minutes put the potential for December tapering back on the table, which presented commodity traders with a highly lucrative opportunity to sell short on gold, silver, copper, commodity currencies. We've had a lot of opportunities whilst the US dollar index rallied to hit a daily high on the news. So the FOMC committee members also highlighted specific scenarios in the minutes under which conditions they would be looking to begin tapering sooner rather than later, the US economic recovery being one. The minutes, they suggest the recovery is continuing at a moderate pace with further improvements in the labour market. And before the minutes were released, there was an 80% chance that tapering would occur in January or March, and that those odds remain the same, especially if non-farm payroll data due for release in the next 2 weeks comes out below market forecasts. So this now puts the US employment data high on the traders' watch list. Looking ahead to next month, based on the moves we saw this week on the USD and commodities, the December non-farm payroll report and the final FOMC meeting of 2013 scheduled for December 17th and 18th will definitely be big market movers and the next ones to watch. So with that, we will take a look very shortly at what is looking interesting on the markets right now. So we're just seeing there's a lot of activity on oil, gold. So we'll take a look at those very shortly. So before we start looking at the live technical analysis, just a little bit about the Gold and Silver Club. I am Phil Carr, professional trader, trainer and speaker. I am the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars, and workshops. Joining me in running the Gold and Silver Club alongside our team is Nik Kalsi, professional trader, investment analyst, and speaker. Nik began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nik spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. Through his first-hand relationship with some of the world's most successful traders, discovered the formula, the mindset, and the tools that give any individual the definitive edge to trade in any economy, and also regularly writes for a number of global business and financial publications and appears frequently on financial television with myself. So that's a little bit about the Gold and Silver Club, guys. So we're just going to take a look at the gold price right now, looking interesting, trading at $1,245 an ounce. So we'll take a look at that shortly. Now, in terms of seasonality, where are we at the moment? Well, it looks quite interesting because we do expect to see a bottom in the market at the moment around the mid-November. So we normally see prices going into the last week of November supportive for gold, supportive for silver. So we're on the 22nd of November at the moment. We did struggle to break through the 1,240 US dollars an ounce level We are holding on to that. We've seen a lot of support there today, actually, in fact, as well. We're going to be very mindful of how the US dollar index is going to be moving. We are going to be mindful of seasonality potentially would dictate that we could get some support here and a breakout to the upside. We're at very key levels at the moment, so we're definitely at event areas. We'll take a look at that on our charts, whether we're going to break lower. If we break lower, we've got a big fall to come on gold and silver. If we go to the upside, we could get a short-term rally here into the end of November. Next Thursday, we've got Thanksgiving. Then Friday is Black Friday in the US. Monday is Cyber Monday. This is where they could do all the sales on the internet. So this typically does cause, in the markets around this time of year, we do see buying occurring, not just with the commodities. We see that on the indices too, before we start seeing some sell-offs into December, just before the Santa rally, which we get over the Christmas period. So that's what we're looking at in terms of seasonality. And we have a major FOMC announcement, which is going to be delivered on the 18th of December, which is going to be another big announcement that you want to be trading. So the US dollar index at the moment, well, the strength in the US dollar index has caused the gold market to drop. So every time we've seen strength in the USD, gold then drops and vice versa. So we'll take a look at that and what the US dollar index is doing currently. So the top trades of the week, before we do that, using the Gold and Silver Club signature trading strategy. So we've had some good opportunities this week. We had a nice short on earlier this week on WTI oil. We had a nice inverse hammer there at key resistance level, just very simply entry 94.30 for the price to be lower, and we came down just for a day trade, price finished lower. And then we'll move on to natural gas. So we'll take a look at, and Peter will definitely, we'll take a look at those. We'll take a look at oil for you. We'll look at that in the technical analysis and look at last week's setups too. So natural gas, we had a really nice natural gas trade. So these are our top trades that we've had. We've had a lot of setups this week, to be honest. We've been running our Gold and Silver Club International Traders Competition, and we've been averaging at the moment roughly 15 to 20 setups a day. So these are a selection of our best setups here that we've had, but it's been a phenomenal week. So natural gas here, we had a really nice trade here. We just continue to follow an upward trending market here where we had higher lows and higher highs. And natural gas broke out to the upside, entering at 3.564 on the natural gas index for the price to be higher here, and that resulted in again a win there for the price to be higher natural gas index. Australian US dollar, we had two sell positions here. We had a sell position prior to the FOMC announcement, entering at selling at 0.9405, and we had a tremendous move to the downside over 145 pips, and also another opportunity to short on the FOMC announcement, which again produced a nice sell opportunity, selling at just below 0.9405. So two great day trades that we've had there, just for the full price to be lower again. Gold broke down during the FOMC, broke out consolidation zone, set at 1276 and 1,250. Both resulted in wins for full trades for the price to be lower there on gold. And silver, we had a nice breakdown lower as well, just prior to FOMC, the level of 20.29. We broke down from that key level of support, and we also produced another winning opportunity. So those are some of our top trades we've had this week. We'll take a look at what setups we're seeing at the moment. There are some good setups forming currently too. So with that, we'll just go across to binary.com, and we'll be looking at the rise and fall trade setups at the moment, and we'll take a look also. Let's look at we'll be looking at the US dollar index too. Looking very interesting there as well. Okay, good. Right, so what I'm going to do first of all is, let me just switch screens for you as I set this up. So if you want to just have a look at your binary, we're going to be looking, binary.com, at the rise and fall type of trades. And we're just going to set this up so you can look at the correlations as well. So we'll go on the MetaTrader just to look at our charting. Okay, this should just come up on your screen very shortly. There we go, perfect. So we've just got the US dollar index on the screen at the moment. I'm just going to load up the correlation so you can have a look at the inverse correlation at the moment. To Fibonacci level, just down here below, we could potentially see here quite an interesting move to the upside for see gold and silver get supported. So let's just see if we can run. Oh, there we go. The correlations are loading. Okay, here's the chart that we want. Okay, so we're just going to put the US dollar index on the screen. And this is essentially moves inversely to gold and silver. So the move that we've had here over the last several days has been quite extensive. So if you just take a look at, this is the gold move here that we've been seeing with the black lines here on the chart. And you can see this is the US dollar index. I'll try and make that a little bit clearer for you. Getting, for some reason, everything's running a little bit slow today. See if we can get this. There we go. That's clearer for you. Okay, so here is the inverse correlation here. So you got the this is gold, as we've essentially with the black line here. We've seen a big sell over the last few days. We've hit 4.5-month lows. You've seen during the sell-off, the US dollar index has been gaining a lot of strength here, and today we are selling off with the US dollar index. So it's coming down on the daily time frame at the moment. So if it does that, this is where we could find the support for gold. So you definitely want to be bearing this in mind at the moment for gold. We're going to be monitoring the US dollar index closely here. So we're going to see whether the US dollar index is going to fall further and come down to the next Fibonacci level just below here. Just going to put that on the 4 hour as well. So if we continue to come down, that's where we could find the gold support. So let me show you gold now. So this is gold. We're actually forming a consolidation on gold at the moment. We've got these key levels just on the chart here. So we've got the key level of support below at $1,236 an ounce, and the key level of resistance just above at $1,251 an ounce. So I'll put it on the daily just to give you a better picture. So this is how gold looks on the daily time frame here using candlestick charting. So at the moment we're at 4.5-month lows. If we take out the lows of this week from yesterday at 12.36, we've got a long way to go lower. There's hardly any support here. The next levels here, which I wouldn't really count 12.27, it's going to be really down to about 11.95, which will take us back to within this downward trending channel. So we haven't had confirmation for a buy to the upside here. We haven't had confirmation for a sell. So we're going to be monitoring this today. Are we going to break above 12.51, or are we going to break below 12.36, or are we just going to stay consolidated? The longer we stay consolidated, the better, because finally when we do see a breakout to the upside or the downside, it's going to be a bigger move, a clearer direction we can trade. Now, one setup which has been playing out quite nicely is this New Zealand US dollar setup here. We've got a break of a major level on the daily time frame. We broke through a major moving average here as well on the daily. So we are getting a little bit of support here now as we move into the US session, mainly due to US dollar index at the moment. So monitor that on the 4 hour. I still like this for a sell short just because we have broken through key moving averages. We've broken through previous lows. We've now broken through a Fibonacci level. It does look bearish. In fact, we might take this for a sell short. The price only needs to finish just 1 pip lower here just for the trade to be lower by the end of the day. New Zealand US dollar looking the weaker out of the commodity currencies right now. If we move across to Australian US dollar, that's also broken through major support If we go across the 4-hour time frame, we've just had some really nice moves lower. You can see we've had inverse hammer after inverse hammer again today. We just continue to break lower. We've broken through a major level of support at 0.91944. I would say we're going to just continue here until we get to 0.90616. Based on the formation that we've got on the moment. Australian US dollar still looks weak, so that's a potential trade setup we can take too. So unlike gold, which is finding support, so gold's finding support here at a key level, but Australian US dollar isn't. It's broken the key level. New Zealand US dollar has broken the key level. So those two are looking very good for shorting opportunities at the moment. Copper did break out to the upside yesterday. We do like copper here. We think it's going to get to the next level here, 3.2273. So copper's been really very good to us over the last couple of weeks as well. We've had a lot of nice sell short opportunities. We've consolidated for the last week or so, provided a lot of opportunities within that range, and we broke out to the upside just last night. So that is, we're going to look at that for a potential buy here on copper, and I really like WTI. It's lining up really nicely. Both on the weekly, if we go out to the weekly, on WTI, we've got a nice consolidation for me where we are found support at some major trend lines here. So this is where the market has been supported. We've had bounces of these major trend lines. On the weekly, we've got a dragonfly doji, another dragonfly, another hammer, which is supported for the price. And now we're just looking for a break above the 96 level to rally that back up to 98 here, which would be roughly about a $2 move, actually just below 99. So it'd be about a $3 move, 300 pip move, just the price to be higher here for WTI. So all we need for that to confirm is a break above 96. So we'll be waiting for that. Looking at Brent at the moment. So Brent last week. Brent, okay, so we had some sell short positions on Brent last week. Now, Brent did actually sell off last week. We came down to some key Fibonacci levels below before it found support. So just depending on your entry time there, we did actually, we had a fall to the downside here where we did break down below 107. Depending on the entries there was some choppiness around last week, around Friday afternoon there. So we do take note that there were some choppy moves on Brent. The overall direction was correct on Brent. We came down to just below there, the 106 level. But obviously timing with binary trades is quite crucial when you actually close out of the trade. So that was one of those trades we just really would have liked to extend the setup to the Monday. We then had to follow through. We had a lot of choppy moves on Friday, so you may have just been out by a couple of points on that move for a sell short. Then we had the continuation on Monday and Tuesday, providing sell short opportunities until we found support at 106. And on Brent here on the daily, we have finally broken out of this downtrend. So we've got this downtrend which has been in play really since mid-October. We're getting lower highs here, and we broke out of 108.43 just yesterday, broke out this downward trending channel. We just look set to come up here and hit 111.24 Fibonacci. So it's going to be about another 40-point move, 50-point move to the upside. I wouldn't trade this on Brent at the moment, the breakout, unless you caught it yesterday from the breakout. Had a really nice move. I've been looking at WTI now to trade the breakout. We've also had a really nice moves on natural gas these last few days. So here are the correlations with the energies. Natural gas breaking out, UK oil breaking out, and also WTI oil breaking out. Now, we could actually see this pull up the commodities out of their current downtrend too, because copper is starting to break out. So we've got just gold and silver are the ones that we're just waiting now for those to trigger too. But natural gas here, some really nice moves. You can see we found support here at this downwards, this trend line here, 1, 2, 3 level bounces. Had a nice entry here for both a trade on the MetaTrader platform and also for binary, just priced to be higher, trading the natural gas index. So we've reached over a 10-to-1. We're continuing to rally here on natural gas. So the energy is looking good here, looking strong for the rest of the day. And they do tend to have a lot of activity as well on Fridays. We see a lot of activity on the energy markets. Okay, so with that, let's look at which trade setups are looking the best right now. So I would say New Zealand US dollar, we've broken through a major level of support here. We might get a little bit of a retracement, but I would expect a continuation. There's no reason for it really to get supported here unless we get a close above this key 200 moving average again, unless it completely reverses, in which case you're going to want to be monitoring the US dollar index here. This we want to see if the US dollar index is going to get supported or not. So New Zealand US dollar looks good for a short. Australian US dollar also looks good for a short as well right now. I'm going to, both of them are good to be honest, so I'm going to take trade short on both of those markets. So I'm just going to go for Forex. We're going to do Australian US dollar, and I'm just going to look for that to be lower by the end of today. We could get a reversal next week, but as I said, there's no real important reason for it to get have a reversal today. We don't have a lot of major news this afternoon, so we're probably going to get a continuation here on Australian US dollar. So what I'm going to do is the trade to be lower by the end of the day. So start time now, and let's just go to, see if we do 8 hours on here. See how far we can go up, see if we've got to 9 hours. No, 8 hours, that's fine. So current spot price 0.9165. So we're just going to purchase that for a 8 hours time, $2,000 purchase for a $4,000 payout, 93% payout on that for Australian US dollar to be lower than 0.9165. So get best price. We'll purchase that full trade. Yep, great. So that's been executed there on Australian US dollar. Now we go, so that's been executed here. We want the price to go lower. So we've broken, we continue to break down through major levels. So we're just going to be looking at this move like this until we get to the next fib level here at 0.90616. We are going to take New Zealand US dollar shorts. Okay, let's just take. Okay, so getting the price of New Zealand US dollar, just get the best price. We're going to go again, the same risk. So for 1,118 and 61 cents, we are going for a 90% payout there to get best price there. 2,108 for 4,000 payout on that. We're going to again just look at the market here. We're looking for the market to come down today, like so. Market only needs to finish one pip in our direction. We'll win the entire trade. So we're going to place that contract for a full. Just purchase the contract. Okay, perfect. That has been done. And let's look at WTI. WTI is not ready yet. We do think that's going to break out. Brent at the moment, it's on its way up really, isn't it, to 111.24. That's the next level it's very likely to hit. But it's a bit overextended, so we'll leave that for now. Gold and silver, they're still not breaking out of their consolidation zone here. So we've got that consolidation, waiting for a breakout in either direction. So no clear direction yet. Although if it goes, if we get a break lower than 12.36, we've got a lot of downside potential here. Same with silver. If silver breaks below 19.70, there's not a lot of support here until around $19 an ounce and then $18 an ounce. So it could be about 150 point move. Very, very big drop we've got here on silver if we break lower. We could get support here based on seasonality, but the chart's not telling us that it's ready to buy. Just getting consolidation here, exactly the same as gold. So just waiting for a breakout here in either directions. That's not ready yet. We look at actually natural. Let's look at the. Yeah, we're going to take a look at copper. Copper is looking good for the breakout because if we break above the last 4 hour high here as well, I actually really like copper here. We're in a breakout trade from this already. I'm going to look at copper because I really think copper has got it's going to find legs here and get up to Fibonacci level above just 3.2273. So with copper, we're going to go to sectors. And we are going to go for the metals and copper index. I'm going to just be in that, see how many hours we can go ahead. Okay, see if we can go 5 hours. the contract to be higher. I've got a nice 81% payout there. So there we go. Contract purchase for copper. So we've got copper long, Australian US dollar short, gold indecision, USD USD CAD. Hello, we've just come up to a major level of resistance. You can see that 1.0. That's one of the profit. 1.056. There we go. It's previous high of August. Let's look at the 4 hour. See if we've got any setups here. Another 62 minutes for that candle to form. It's not ready yet, but I would look at maybe there might be a quick short here for copper. Sorry, for USD Canadian dollar. It's just found resistance at a key level here. You can see that key is coming up to almost 2013 highs. That'll be ready to trade in about an hour, depending on how that candle forms, if we get a continuation to the downside here. So it's not ready to trade just yet, but just monitor that on the 4 hour and wait for 1.054 to break. And we want to take a natural gas. So look, just bring across natural gas for you guys. There's natural gas. Actually, we'll just bring that up on this profile here. So there you go. So Brent breaking out. US oil. Definitely, guys, keep an eye on WTI oil today. Looks right for the breakout today. You've already got the breakout. UK oil, look at that. It's definitely, I think it's just on its way. To be honest, I'm going to go for a quick day trade on this just to take advantage of the momentum with Brent. It's just going to come up and hit. It's going to kiss that level above. So it's an easy trade. You can either do that through the index or you can see how bullish the momentum is. Going to come up, kiss 111, that Fibonacci 23.6 Fibonacci there, 111.50 thereabouts. It's about another 90 points higher. Just because everything else is breaking out, you can see I could trade natural gas here, or I could trade WTI. WTI will trade the breakout. It's not ready yet, but UK oil Brent is on its way. So get best price 1 hour. We've got to move forward just one contract there to 110. Okay, I've purchased that before we miss the opportunity. There we go. That's been done. Okay, so energies are definitely ones to watch today. Gold and silver, until they break out their consolidation, there's not too much action there. We're going to see probably more downside here of Australian US dollar, New Zealand US dollar, more upside with the oil and the energies. And copper, I think we're going to continue to get a breakout today. There's not too much breaking news that's going to be coming out today. We've got a lot of news moving into next week. So let me talk you through that now as well. And let's just see if we've got, I think we might have a couple of questions. And let's just go to the main presentation. So for those of you guys who are new to Bonnie.com, you can definitely, it's worth taking advantage of some additional free bonuses here. You can actually get $20 trading credit or £20 to take advantage of your live of a live account here. So just with bonus code 11121F20, very simply you go to Bonnie.com, you select sign up, open real money account, enter bonus code 11121F20, and you can get $20 or £20 trading credit to start off your trading with. Why not? It's free money to take advantage of for your Bonnie.com training. And the major news that we've got coming out into next week, so there's not too much news coming out this afternoon, but we have next Monday, the 25th of November, 3 p.m. GMT, 11 a.m. Eastern time, you've got the US pending home sales. So the National Association of Realtors Pending Home Sales Report measures the change in the number of homes under contract to be sold, but still awaiting the closing transaction, excluding new construction. So a higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish, and of course that has the inverse correlation with gold. Next week on Tuesday, the 26th of November, we at 3 p.m. GMT and 11 a.m. Eastern Time, we have the US consumer confidence. That report measures the level of consumer confidence in economic activity. It's a leading indicator as it can predict consumer spending, which plays a major role in overall economic activity. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish for the US dollar. Moving into next week, on Wednesday, the 27th of November, we have at 1:30 p.m. GMT and 9:30 a.m. Eastern Time. This is when we have US core durable goods orders. So that report measures the change in the total value of new orders from long-lasting manufactured goods, excluding transportation items. So a higher reading indicates increased manufacturing activity. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish for the US dollar. And of course, for your commodities trading, we have oil inventories and natural gas next week. Before that, at 2:55 p.m. next Wednesday, the 27th, or 10:55 Eastern Time, we have the Michigan Consumer Sentiment. That index rates the relative level of current and future economic conditions. There are two versions of the data released 2 weeks apart. The preliminary data tends to have the bigger impact. That reading is compiled from a survey of around 500 consumers. So a higher than expected reading should be taken as bullish for the USD, while a lower than expected reading should be taken as bearish for the US dollar. Next Wednesday at 3:30 p.m. GMT, 11 a.m. Eastern Time, we have the US crude oil inventories. That data reports the number of barrels of crude oil commercial firms have in inventory. So that's, again, very important for our crude oil trades. We often have some major moves on the markets during crude oil inventories. That's 3:30 every week. Certainly in more recent weeks, we've definitely seen a lot of volatility on the market during those key times. And moving into next week, we have next Wednesday. We also have next Wednesday, 5 p.m. GMT to 12 p.m. Eastern Time, the US natural gas storage. So the Energy Information Administration, the EIA natural gas storage report measures the change in the number of cubic feet of natural gas held in underground storage during the past week. So whilst this is a US indicator, it does tend to have a greater impact on the CAD due to Canada's sizable energy sector. So that's important because the CAD is, of course, correlated to oil price too. So, guys, those are really the major news announcements. The crude oil inventories and natural gas, very predictable move each week. We saw breakouts, certainly in natural gas yesterday, so have those in the diary as well. For those of you that are interested in taking your trading to the next level, we are currently, we have 2 more dates available moving into December for the final dates for this year for our Gold and Silver Club Masterclass workshops and opportunities to get involved in our live trading room program too. We are currently running our international traders competition, which is fantastic, seeing a lot of setups on the markets, a lot of money being made. You can find out more about how to get involved in that as well, just very simply at www.jointhegoldandsilverclub.com or contact us at our London office 0207 193 0403, our New York office +1 646 808 0403, or our Johannesburg office, which is +27 11 083 8403. We've actually got a couple of our international traders on the call, Taka, hello, and Nirmal. So good to see you on the call as well, guys. So we'll be cracking on with the competition straight after this webinar. So you can also email us at office@thegoldensilverclub.com to find out more information about upcoming trainings, international workshops, live training rooms. You can find out more there too. And of course, make sure you subscribe to our newsletter at thegoldensilverclub.com to receive free weekly gold, silver, oil, commodity currency news, live market analysis and prices. So with that, guys, we'll definitely we'll see you back here same time next week at 12:30 GMT. Have good luck for the rest of the week's trading. Lots to be keeping an eye on this afternoon, and good luck for the rest of the day's trading. So have a good weekend. That's a wrap for now, and see you on the next one. Okay, cheers, guys. Bye-bye.